Hello traders, Gary Wagner for Trending Markets, just about 10:30 in Honolulu, 3:30 in New York on Monday, November the 30th, 2015. And we do have a softer market as we look at the Dow Jones Industrial Average today. It is off roughly 68 points on the day, trading at 17,729, the low 1722, the high 17,837. So we are close, much closer to the lows than we are the highs, and we are remaining under pressure in the market. When we look at our daily chart, for example, what we do see is that we have run into some real resistance in the market right at that 17,800 range, not precisely that area, but on a daily chart, and that's what we're looking at, we can see a series of highs that come in. But when we look at 17,800, we can see that the majority of the bodies, this one closed just slightly above it, but right at this area is where we've seen this market genuinely kind of close over the last, 1, 2, 3, 4, 5 trading days, all of last week. And then today we're having a defined lower market as it trades, as I said, off about 69. Now, how does that relate to the market we're currently trading, which is the Standard & Poor's E-mini? That's trading at roughly 2079, 2080 in that area. It is down 10 points. We are long at 23 with a stop just below 58, the low being 78. We are trading near the lows. And the way that I want to look at this market right now is to really qualify what we are looking at in terms of a 200-day and a 50-day moving average. And traders, I've just gone ahead and I've pulled up our chart that we've been using. It's a daily chart. Now, one thing that I did adjust, and I realized that sometimes it's user error, so to speak, rather than the charts themselves that are giving us misinformation. I had this particular fib retracement trading from this high here at 2109, but I fixed the low at this low right here, which was at 1860, and that was the secondary low. In other words, I was trying to ascertain this particular move to look at what our potential drop might be. The truth of the matter is that the prior low was much more important, because when we put our fib retracement down at 1831 as opposed to 1860, then what we do see is the 38% retracement level matches up precisely with the 50-day moving average. And it wasn't so much that the fib retracements weren't giving us the information. The truth of the matter is I had not put the fib retracement at the proper points of calculation. And so because of that, we had this just below this or just above this area and not giving us the kind of information that was as relevant. The good news is by taking the call from the 50-day, we pretty much had the same information, and we used that as our entry point for this trade. Now, the real question is, as this market's moved up, we've definitively found some resistance. Do we want to tighten the stop up? And if we do want to tighten it, where do we want to tighten it to? Well, really, the only places that really make sense are the bottoms or lows that we saw last week, except for the fact that we've got this one low that comes in roughly at about 66. So you can trail your stop to 2065 to lock in a little bit more profits on this trade. I think that that's a prudent call. You're still putting it below all of the lows of last week. The only caveat to that is if the market does kind of meander, trade down to the 50-day moving average down to this point and then clip back up, of course, you'd get stopped out because it's right in there. So my recommendation really is to just maintain our current stop just below 58 and see if the market wants to recoup in this area or if we're going to go into some sort of corrective fashion. My sense is that this is going to be a smaller retracement, one, because of the time element. If we consider that this last rally started at the end of September and took us all through October into the beginning of November, we had over a complete month of trading activity. And then when we consider that this move right here has the sell-off itself took us Well, actually, to get the actual dates, I'll have to remove this, but took us till the middle of November, November 16th, so it's only about 15 days. We really haven't given it that full month rally period that we might in fact get. The second real question we've got to ask ourselves is whether or not we're going to go into a Christmas rally. I still believe that there is a strong potential that we will in fact do that, but we'll have to see how that bears out. In other markets that we look at, they're relatively quiet, but interesting moves. We are at 100 on the dollar index, 100.18. So we're right butt up against these highs that we saw back at the beginning of 2015. You have the market beginning to move back up. So say about April comes in right here. So just before April, we saw these markets hit these highs. And so we haven't seen these highs for a good half a year now. And whether or not we're going to breach them is really the question we need to discover as this market unfolds this week. And then lastly, crude oil also trading very quietly, but it is off about 13 cents a barrel at 41.58. Maintain your current long positions. Traders that want to lock in more profits, you can move those stops up as I have suggested. However, my recommendation is going to be to keep them at 58. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another Trending Markets. Bye-bye.